So why don't we talk about just what's going on with your business recently? If we go back to your earnings report, one of the bright spots was actually consulting, which I thought was pretty interesting because you're a company that helps companies with IT infrastructure and AI infrastructure, and AI is supposed to, at least in many people's minds, reduce the need for consulting. What kind of consulting work were you doing?
Yeah, it's a great question. Look, because we run the infrastructure that runs the systems that the world counts on every day, we're a bit more insulated or protected, if you will, from macro. And what you need to get AI off the ground is an infrastructure that's going to work. And then, quite frankly, what we're seeing a lot of demand from our customers is the work that has to happen up front. And there is universal interest and universal experimentation in AI because of the promise. And so that means that the inform and the analyze work and the design work is all happening now. And that's where we play in order to get a customer's infrastructure ready. And in our readiness surveys, they suggest that people feel pretty good about where their infrastructure is, but they need help getting it ready for the future. And the future is AI.
All right, I want to go back to what you were talking about at that Citi conference this week. You said you're going to focus on the 3 A's. One's advanced delivery, the other's alliances. I'm assuming that's like things like Microsoft and Google, but the third one was focus accounts. What does that mean? It sounds a little jargony, Martin. I'm going to be real with you. What are focus accounts?
So when we were spun out from IBM nearly 4 years ago now, we inherited a backlog of about $20 billion, about $8 billion of revenue in a year, about $20 billion of backlog that was a substantial loss to us, to Kyndryl. And we've been addressing that. And in fact, it's been the single largest dollar improvement that we've made in our profitability. And so, 3 years ago, we lost a fair bit of money. Last year, we made a fair bit of money. And this year, we guided to another big profit improvement, another few $100 million of profit improvement. And the core of that is the strategy that you just described well, which is our work with the hyperscalers, moving into the ecosystem that really matters for our customers. That's very profitable work for us. Part of that is how we do what we do, and AI sits at the heart of our advanced delivery efforts, which allows us to automate things for our customers and deliver higher quality services. And part of that is what we call focus accounts, which is reimagining the relationships that we have with our customers so that we can reduce the content that is such a negative economic impact to us and move those relationships into both a profit growth and an investment mode with each of those customers. So we feel good about our progress on focus accounts, but a $20 billion backlog does take a fair bit of time, excuse me, to work through. And so part of what we've been doing is investing to create new capabilities and investing in this ecosystem to drive that progress.
All right, so last quarter, you came just a bit shy of revenue, but you maintained your full year guidance. So it seems like you have confidence in the quarters coming up. We were talking to another AI infrastructure guest earlier in the show, and I pointed out Amazon's CapEx spending for this fiscal year is supposed to grow about 42% roughly, Microsoft by 36%, Alphabet by 62%. What percentage of that does a Kyndryl get? And what are your customers, what are they telling you? Because we heard a lot of talk about maybe the AI infrastructure build-outs getting too big or overblown. We've seen reports that companies aren't really seeing benefits from Gen AI. We even saw Sam Altman say this might be a bubble. So what are your customers saying to you about their build-out?
Yeah, so let's start with the growth rates first, because those are very impressive growth rates. And for our hyperscaler related businesses, so we provide services around what our customers are doing on the hyperscalers, we're going to grow that business by 50% this year. So we're going to grow a little bit faster than what the numbers you noted as our customers continue to invest in AI. Again, the promise of AI is substantial. As an example, we worked with a customer who improved a process using our agentic AI framework, and something that used to take 14 days now takes 14 minutes. So that kind of step change keeps the promise and the interest very high in AI, and we see that as well. In the first quarter, we saw the trends that you noted earlier. Consult grew 30%. Our hyperscaler business grew in the high double digit again, all of which positions us well for the year. Now, keep in mind, our focus accounts work does suggest that we have to take some revenue out. And so we've positioned ourselves for a bit of growth this year, a lot of profit growth again. And first quarter was a good step forward for that.